Good morning, ladies and gentlemen, and thank you for attending this virtual meeting. It's my pleasure to welcome you on behalf of EIH Limited and SKP Securities to EIH Limited's Q3 FY24 earnings webinar. We have with us Mr. Vikram Oberoi, MD and CEO, and Mr. Kalal Kundu, CFO. This meeting is being recorded for compliance reasons, and during the course of this discussion, there may be certain forward-looking statements. These must be viewed in conjunction with the risks that the company faces. We'll have the opening remarks and a presentation by the management, followed by a Q&A session. Thank you, and over to you, Vikram.
Naveen, thank you very much. And ladies and gentlemen, it's still morning. Good morning to everyone, and thank you for joining us today on this call. Our quarterly results, as you would have seen, have been very positive, and for the 9 months, they're also very, very positive. Our focus has really always been on quality, to provide our guests with exceptional levels of service and care, and to maintain our hotels to a very high standard. And with that focus, we have been able to drive premiums in our average room rates relative to our competitors, and also drive strong occupancies, which are reflected in the numbers that you see in our quarterly results. This has always been our focus. This will continue to be our focus. We're also spending quite a lot of time and attention to upgrade our hotels so that they can continue to be successful, continue to distinguish ourselves from our competitors, again, with the focus on our guests, on our quality. I really would like to use this opportunity also to thank our colleagues. Our colleagues at all our hotels put our guests above all else and do whatever they can to provide our guests with exceptional guest experiences. And that also seems to pay dividends, or is paying dividends, with guests' loyalty towards both our brands. If you see our STR data, we're primarily STR1. In some locations, we are 2 with Oberoi hotels, but most of our hotels within the Oberoi brand are STR1. And Trident also, in many locations, are STR1 or STR2. So really, that was what I was going to say. I'll now ask Kalal to make a presentation, and then we can take your questions. But thank you all for attending this call today.
Thank you, Vikram. Good morning, ladies and gentlemen. We have uploaded a presentation on our website and have sent it to the stock exchanges. But may I request Naveen to please put it up on the screen as well? Thank you. So Naveen, next slide, please. Yeah.
So may I just add one more thing, because I don't think we have, I think this has been covered in the perhaps in the press, and we, of course, also did the stock exchange filings. But since our last call, there are 3 more hotels that we have announced that are already now under development. So we're doing a Trident in Tirupati. It'll start with 125 keys, and we have a very nice site, and we can expand that hotel further based on demand and occupancy. We've got a very nice site in Vizag, very close to the new airport. We're also there doing a Trident hotel of 125 keys, again, expandable into the future based on demand. And then I don't know if you're familiar with an area called Gandikota, which is really a beautiful, pristine area in India, the Indian Grand Canyon. And we've got a lovely site there where we're doing an Oberoi leisure hotel, a small hotel of 25 keys, again, expandable in future. So these are, I think, 3 hotels. We didn't cover this in our last call, and I thought I'd mention those as well. And like I said last time, we remain focused on the target that I shared of 50 new hotels by 2030.
Thank you, Vikram. Good morning, ladies and gentlemen, once again. So we'll start with a commentary by a recent report from Howard on the Indian hotel sector, which really, the report really calls this stage to be like an Amrit Kal, where the all India ADRs are at 7,500 rupees, with 3 markets with ADRs over 10,000 rupees, and this is for all segments of the industry within the country. There are 8 markets which have a 5-digit luxury upper upscale ADR. The supply growth has grown by 14,000 rooms, the highest in any year, and the net pipeline is up by 23,000 rooms. The GDP is expected to grow between 6.5 to 7% over the next 3 years. The current pipeline inventory has crossed 250,000 rooms, with more than 2,500 hotels and more than 400 destinations. Rooms demand per day has gone up by 65% and 19% respectively as compared to 2015 and 2019. The sectoral market cap as compared to 2015 has gone up by 1,282 billion rupees as on 31st December 2023. Naveen, yeah. As per the same report, foreign traveler arrivals for India during January to November were 17% above the January to November 22 period, but they still remain below the pre-COVID levels, where arrivals were more than 10 million tourists visiting India, creating future demand potential from a complete revival and a subsequent growth. 2023 ADRs is ahead of 2019 ADRs in each segment, but the gain has been the maximum in the luxury upper upscale segment, where the gain is 36%, and as you see from the table, the others are slightly lower at roughly 32% for the others. The leisure segment continues to expand and contribute positively. 55% of the national room nights is from the upper upscale and luxury segments, whereas it's 34% from upper mid-scale and 11% from the mid-scale and economy. The other thing to note is, insofar as room revenues are concerned, 36% of all India room revenues is earned at the 3 major metros, Mumbai, New Delhi, and Bangalore, which have a 26% supply share. And of course, aiding all this are the 4 new convention centers that have been established in the last 2 years in Mumbai, Delhi, and Jaipur. These centers, the report hopes, will drive new demand and opportunities for hotels in the respective cities. If you look at the industry statistics and compare them with the Oberoi and Trident hotels, which includes EIH owned hotels and managed hotels, the RevPAR growth at Oberoi and Trident hotels have been consistently higher than industry. And the chart is here, so I won't elaborate on the numbers here. Next, please, Naveen. EIH owned and managed hotels continue to demonstrate RevPAR leadership over the STR competition set. What I mentioned in my previous slide was in respect of industry in India in general, and this is a more specific competition set. And as you would be aware that STR collects data from individual hotels, where a single hotel has to provide 4 hotels as their competition at a minimum. And when we use that and we compare the data from 2019 onwards, EIH managed and owned hotels have consistently been above the competition set, with the overall RevPAR leadership being at around 27%. So that's about 27% more than what the industry average or the competition set averages. This is basically a positioning to show how the various segments within our business has performed vis-a-vis in the current quarter, in the quarter 3 of the current year, versus the same quarter in last year, where almost every segment has grown substantially. But the highest growth has been seen in the metro cities. So if you see on the right-hand side, Oberoi Metro and Trident Metro have grown by 27% and 29% over the same quarter last year. This is followed by other brand hotels, which we have, Maidens, etc. And this is followed by the Oberoi leisure locations, where the current year Q3 RevPAR has grown 18% over last year. The trend in international locations is also healthy. However, I must point out here that the hotels or the resorts that we have in the MENA region, they have been affected by due to the Gaza conflict, and therefore the decrease in occupancies that you see in places like Morocco and Egypt is essentially because it's been affected by to some extent by the ongoing conflict. But otherwise, we've managed to hold on to our rates. And of course, Indonesia is doing extremely well in terms of occupancy with similar ARRs that we've enjoyed in the past. The blue line here represents the hotels owned by EIH, and the yellow line represents all domestic hotels which are owned and managed by EIH. The RevPAR in both cases have grown, in the first case by 27%, and in the second case by 23% when we were to see year on year. Getting into a breakup of the month-wise occupancies and ARRs. ARRs have been really strong in all the 3 months of October, November, and December, as is evident from the bar charts. Occupancy was slightly lower by 1% in November, but it has held on. It has increased, of course, in October, and in December it's held on to very high occupancies of 84%. So overall, in Q3, the overall occupancy was a high 79%, against 77%, with an average room rate of close to 20,000, as compared to 16,700 in the same quarter last year. A city-by-city positioning. Agra has really rebounded back with a 39% RevPAR growth, and this is primarily with the influx of foreign tourists back. Mumbai this is followed by Mumbai, Calcutta, Hyderabad, Udaipur, Delhi, of course, and so on and so forth. Shimla and Chandigarh continue to be affected because of the negative environment conditions. And international, although in general it's a healthy trend, and most of our locations have done well, but the RevPAR has slightly degrown because of the impact of the Gaza conflict or the Middle East conflict on the various hotels around that region. Direct segment continues to have strong tailwinds. Corporate has also picked up from where it was in the past, and leisure and MICE also is seeing pretty steep upward trend. The flight catering and airport lounge business has collectively, these are collective numbers for both the catering and the lounge business. And this is a substantial improvement, and it's a strong bounce back with strong margins of about 35%. So we move on to the financial numbers. As you can see, this is the strongest quarter in the last many years. In fact, the strongest quarter that we've seen in the history of the company, with an EBITDA of 309 crores for the quarter, revenues of 680 crores, and a PAT of 187 crores. Consolidated performance for the quarter has also been extremely strong, with total revenues of 770 crores, EBITDA of 353 crores, and PAT of 230 crores. The standalone funds position continues to improve, and as you can see from the COVID days up to here, the journey has been really remarkable. The same is in case of the consolidated funds position. If you can move on, Naveen. So the consolidated funds position is about 684 crores as on 31st December 2023, which really places the company in a healthy position insofar as the balance sheet is concerned, and obviously provides access to funds for future growth ambitions of the company. Next. So this is, I will not read out these numbers because these have already been published, and it's the same numbers. These are trends in the revenue, EBITDA, PBT, and PAT from quarter on quarter. And for all our friends who are interested in following trends, these charts may be relevant. These are the consolidated performance highlights. Same quarter on quarter trends from quarter 1 of FY22 to quarter 3 of FY24. Of course, all the performance that has happened is in terms of, it's not only in terms of financial success, but the awards that the company and the brands have really garnished. We've also been awarded by the CII DX Awards for digital transformation. So this is a list for everybody who's interested to have a look. The business footprint is for informative purposes. And with that, I will end the presentation here. We are happy to, of course, take any questions that you may have. Thank you so much.
Thank you, Kalal. Thank you, Vikram.
Thank you.
Friends, we open the floor for the Q&A session now. One request, if participants can limit themselves to 2 questions because there's a long list of participants wanting to ask questions. Just wait for a couple of minutes while the questions line up. First question is from Vikas, one second, from Nilesh Saha. Nilesh, please go ahead.
Yes. Hi, are you able to hear me?
Yes, Nilesh, loud and clear. Please go ahead.
Okay, great. Just okay, great. So yeah, I think last quarter you gave us some color on the expansion path that you have in mind. We did some numbers basis that, and one of the things that we probably understood, right, and you sort of indicated adding 50 hotels and 4,500 rooms, right? Which by FY30, and which basically indicates adding about 8 hotels per year. But and also indicates probably slightly smaller hotels of 80-90 rooms per hotel, right? Which is where I wanted to understand how your thought process is shifting on the market, because what we see on the market is that really in the big metros, the demand is really focused a lot around MICE, right? And that typically requires bigger hotels, right? Now, from your point of view, how do you see your, what is the size and scale of the incremental hotels that you're planning? Do you feel there is room for you to have multiple hotels in the main metros like how you have in Bombay? And do you think that at the kind of ARR and occupancy you would like to be, you can, with that in mind, what is the right kind of size and format that you're planning, right? And is there a way that you could also capitalize on the MICE opportunity that we see in metros?
Right.
Thank you.
Thanks, Nilesh, and that's a great question. Really, the size of the hotel or the number of keys that you have really is dependent on the location that you're going to open a hotel in. Now, in leisure destinations, where we're going to see quite a lot of our growth, there will be smaller hotels. And if you see our Oberoi resort hotels, they have a very high rate and a very strong RevPAR. And I think Kallol had showed some of that in his chart today. So in city hotels, inventories will be larger, but again, probably in the region of, let's take the Oberoi Bombay. We're sitting at the Oberoi Bombay. This hotel has 220 keys, and there are 20 suites that are currently under renovation, really to cater to long-term guests. So the inventory will go up to 240. So our hotels, in order to provide personalized service, to provide a guest experience that is second to none, inventories, a smaller inventory really helps, and that's our focus. Our focus is on quality, our focus is on service, and what we've seen is with our Indian guests, the propensity to spend on premium hotel experiences has significantly increased. And at least our analysis suggests that this will become even stronger going forward. And we need to be well placed in order to cater to that business, which is a high rate, high margin business, where guests are really looking for quality. So that's the first thing I'll say. The second thing, on your point on MICE, again, very, very valid question on MICE. MICE typically, particularly leisure MICE, is if you have a unique product, you can command a significant premium on average room rates or rates. And this is a very important market that we see and we want to play in. Not only for the high rates that we get, but also these are typically lifetime's experiences in a family's, so for example, a wedding or a celebration of a important family event. We want to be the hotel of choice where these events take place, so that when people look back, they associate their family's important events with either an Oberoi or a Trident hotel. Now, I mentioned we're opening hotels in Tirupati, in Vizag, and we're ensuring that we create adequate MICE space to really cater to this segment in a very effective and unique way. So I hope I've answered your question.
Yeah, just I think one small clarification, right? Now, you spoke about adding 50 hotels and 4,500 rooms, right?
Yes.
And then you also spoke about leisure or destinations. And in fact, if I'm not mistaken, the 2-3 hotels that you have announced between last call and this call are all in the leisure side. And is it the shift that you are, I mean, you have always been in leisure, but the question I'm asking is predominant addition, are you doing on the leisure side instead of the city hotel side?
If I had to say where the larger number of hotels will come, it'll be in leisure. On rooms,
Okay.
not be the case, because our city hotels will absolutely be larger.
Larger.
So add one other thing, that for a city hotel, if you want to be successful, you need to be in a premium location. I mean, location is critical. You can build a very good hotel, but if you're in the wrong location, you will not generate the results that you need to generate. And with prices of land in city hotels being what they
Right.
are, really the only model in our mind for expansion in city locations is a mixed-use model, and absolutely
Okay.
we are looking at that too.
Oh, you are looking at that, a mixed-use model.
100%,
Makes sense.
yeah, and we
Makes
will
sense.
be
Right.
making some.
Right.
We will hope
Right.
in the not too
Sorry.
distant
Right.
future.
So sorry, I don't want to take up too much time, but just one small clarification I wanted.
Can I just add
As
one other thing, Nilesh? And we
sorry.
will be announcing in the not too distant future initiatives around that.
Okay, just one small clarification, right? In the current quarter, right, we are seeing a certain combination of ARR, occupancy, and margin, right? Now, that is a function of a certain mix that you have between business hotels and leisure hotels, right? If you are incrementally doing more leisure hotels, right, on a round the year basis, right, in the leisure hotels, right, you know, you could argue that your ARRs could be higher, but maybe the occupancies on an year-round basis, I would probably imagine that they are lower. And in that sense, could you comment on how we should think about that and the margin profile as you shift incrementally towards leisure
No,
hotels? Thank you.
absolutely.
That's the last question.
So Nilesh, our margins in Oberoi leisure hotels, number one, our rates are significantly higher. Number two, you're absolutely right. The occupancies are lower because it's more seasonal. But our margins are the highest in Oberoi leisure hotels. I don't know if I can give specific hotels. I can't. But our margins are significantly high in Oberoi leisure compared to Oberoi City, Trident City, and they really are at a big premium over the other hotels. So expanding in leisure will actually support our margins rather than detract from our margins. Thanks, Nilesh.
Nilesh? Yeah, I think there's some connectivity issue.
No, that's all from my end. Thank you so much for your detailed responses. Appreciate
my
it.
pleasure,
Thanks.
Nilesh. Thank you very much.
Thank you, Nilesh. We take the next question from Saket Mehrotra. Saket, please unmute yourself and go ahead.
Hi, am I audible?
Yes, you are. Please go ahead.
Good morning, Saket.
Good morning. Good morning to you, sir. Just had a question on the note 5 in your earnings. There was a mention of a vacant freehold land in Gurugram being converted to PPE. Are we planning any development on this? What's the rationale behind this? Just if you could tell us something about it.
This land is in Sona, and it would be premature for me to comment on what our plans for that are. It's lovely land in a very good location, very close to Gurgaon. But I don't want to say anything beyond that at this point, if that's all right.
Okay. And is it closer to that belt where you have Grand Bharat and all these other resorts? Is it in that stretch?
It's probably better located than that.
Okay.
Because it's not far off of the new highway. So it's probably from Gurgaon it'll take you from the heart of Gurgaon it'll take you 25 minutes.
Great. Yeah, that's the only question I had. Thank you so much.
Thanks, Saket. Thank you.
Thank you, Saket. Take the next question from Sanjay Kohli. Sanjay, please go ahead. Sanjay, please unmute yourself and go ahead. Okay, we take the question from Vikas Ahuja. Vikas, please go ahead.
Hi, am I audible?
Yes, you are. Please go ahead.
Hello, Vikas. How are you?
Yeah, hi, sir. Good morning and congratulations on such strong numbers. I have a couple of questions. Number one is related to, we have been witnessing a 20 plus K kind of ARRs now for I think second consecutive month. So if I talk about, from November, December, taking it to January and, early February, are we seeing this trend holding up?
Yes.
Getting average rates of 20K?
Sorry, Vikas, your voice is breaking a bit, but I think you're saying, if I've understood you correctly, your question is, will we continue to see, or are we seeing these strong rates going into the future in the months of January? Well, January is already over, and February as well. The answer to that is yes.
Yes. I mean, I was just trying to understand if this 20K is holding up. Secondly, if I look at the overall RevPAR of Mumbai, especially 34%. And if I look at some of your peers who have reported numbers, they reported Mumbai RevPAR was more like in mid-teens. So what led to this, strong performance compared to maybe even your larger peer in terms of market cap?
So I can't talk about the competition because, but what I can say is, again, the very basic stuff. We focus on the basics. It's looking after our guests. It's maintaining our hotels. It's providing service and care, really heartfelt service. That's what we are committed to doing, and being the hotel of choice. And hopefully, if or not hopefully, but guests value that and therefore are willing to pay a premium for it, which is reflected in the numbers that you see.
Sure. And also, you have talked about adding 15 hotels by 2030. Is it possible to give some maybe rough color on how much is going to be on managed, how much would be owned, and maybe in terms of what would be the leisure versus, the corporate hotels? If any color around that would be great.
So because as and when we have information to share, we will absolutely share it. And if we could leave it at that, I'd be really grateful. Like I said, we've announced three hotels. Hopefully we'll have more good news to share, and we'll continue to share that with you. And of course, along with all compliances, inform the stock exchange, etc. So
maybe Vikram, I'll just add one bit to it. These three hotels that we're speaking about they are completely new hotels, but two of the other hotels which were already under construction and are scheduled to open, they are absolutely on track. Maybe Vikram, you want to elaborate on that?
That's yeah.
So therefore, effectively, in the current year, we're going to have two hotels coming in, which is already in advanced stages of construction and completion.
Sure, that's helpful. One final question I have it on margins, and this time, there was a very, very strong execution there. Employee cost, I think it gone up 11% Y&Y. But what we are hearing that the employee cost overall for the business is kind of going up. So do you think there is a risk of this number accelerating going forward? And secondly, in other expenses, what led to because that has not increased. So if you can just maybe quantify what led to other expenses being where it is. Thanks a lot, gentlemen, and best of luck for the next quarter.
On employee costs, this has been we really, one of the things we do is conduct a Aon employee engagement survey. And one of the things that has come out in that, and it's an industry-wide phenomenon, is really the balance between one's working life and one's personal life. And we made a commitment to our colleagues that we will do our best to ensure that they have that balance. So that's really a reflection of that. It's not so much a reflection of huge wage escalation. So that was the first thing I'd like to say. On the other on consumption, etc. I don't, Claude, you.
Yeah, consumption is obviously improved as a percentage of revenue because with growth in rates, the flow through to EBITDA is obviously much higher than the growth would have happened through only increase in occupancy. But there are a couple of things for which the other expenses are slightly higher, and those are all supporting the business. For instance, repairs and maintenance. As an organization, we've never shied from carrying out the repairs and maintenance and renovations that are due. That's slightly higher. We have also, over the last several years, been very attentive to ensuring that our compliances and our legal sort of cases, etc., come down, and they're getting resolved one by one. And of course, there's some attention towards that. Therefore, some consulting fees towards those expenses have also gone up. And the other increases are generally in respect of, let's say, marketing efforts, etc., where we believe that our positioning needs to remain where it is and improve further. And therefore, there's a lot of impetus that we are currently giving on our marketing expenses as well. So yeah, by and large, that is what it is. But on the other hand, we are also saving costs. For example, in several of our hotels, we have introduced the solar power, which has effectively, although it has an initial upfront cost, but it gives an advantage over several decades. So I think all in all, it's more or less under control, and we don't see it going out of control in the foreseeable future.
Sure. Thanks. I was actually looking for the savings because when we look at Y&Y increase in revenue, it's 26% and other expenses only 8%. So I understand power was one of the, which led to.
Yeah. So because I answered that in the first answer is where if your flow through is better because of increased rates, which has always been our endeavor. Of course, occupancies are also 80% plus. So therefore, that really ensures that even if your costs go up marginally, it doesn't really matter.
And also the fact that it's a large part is fixed costs. So when you drive incremental revenue,
it's only
flow through. Yeah. So
yes, I understand. Thanks a lot, sir. Thank you.
Thanks so much, Vikas. Thank you.
Thank you, Vikas. Take the next question from Sanjay Kohli. Sanjay, please go ahead.
Am I audible now?
Yes, you are. Please go ahead.
Thank you.
Hello, Sanjay.
Thank you. Fantastic results. Congratulations. And it's wonderful to have seen these results come, and the markets are also giving you a thumbs up. Great quarter.
Thank you, Sanjay. Thank you.
Mr. Oberoi, my question was on, if you're on some of these destinations where we don't have a presence currently, and how you are viewing them if you were to sort of look at it from a point of view of, religious destination or, a resort destination. I suppose a religious traveler also probably views it as a resort destination, but we're looking at cities like Goa, Amritsar, Varanasi, or some of the possibilities of southern Indian resorts. How would you sort of prioritize?
Sanjay, we need to be in locations where our guests travel to. And that will be our effort to, whether it's a religious destination, a leisure destination, or a city destination. Our focus should be in opening our hotels in locations where guests who are loyal to either of the brands can stay with us in those locations. and that's the focus of will be the focus of our expansion as well. Now, in some leisure destinations, there may be destinations that guests don't travel to now because they are they may not have suitable hotels. And again, we want to be in those locations as well. These are pristine, beautiful locations where one can really escape from city life that we all face and have peace, tranquility, beauty, natural beauty. And that will also be another focus, provided it's reasonably easy to get to. So within a 3-hour drive of an airport, those locations will 3 hours or less. Those locations will also be an area of focus for us.
Okay, great. Thanks. And sorry about the technical problem with the audio.
No problem. We could hear you loud and clear, Sanjay. Thank you so much.
Thank you.
Thank you, Sanjay. We take the next question from Saurabh Patwa from Quest. Saurabh, please go ahead.
First of all, congratulations and for the great set of numbers. Just two questions, sir. One is on the current quarter numbers. They reflect a very sharp improvement in Mumbai specifically. Is it also to do with have we been able to do some brownfield capex here, which has now started which has led to higher rooms, or I think we were to open the banquet, which was closed for some time. Has it opened this quarter?
Yes. So we've done just to highlight some of the renovation we've done in Bombay. We renovated the main function room and the adjoining rooms. With that, we've also renovated the lobby and the lobby bar area or the lobby lounge area. We brought in some F&B there as well. And our banqueting room, which has been renovated, has been extremely well received. I've actually attended some functions there, and guest response has been very, very positive. I was talking to a couple who said a member of their family was getting married, and they were absolutely going to hold it in Trident Nariman Point in our banqueting area, because it in many ways is unique, the way we've designed it and the way food is served and presented. So I think that will yield results. We've also renovated the bar area at Trident Nariman Point. We will be doing the restaurants as well in future, and we're also doing the 20 suites at the Oberoi Mumbai, which are designed really to cater to guests who want to stay longer. They're beautiful suites that will be, in fact, that come on stream 1st April and 15th April. 10 will be available for sale on the 1st of April, and another 10 on the 15th of April. And these really are designed to cater to guests who want to stay longer. So they're very residential in their design. They also have a kitchenette, which is well suited to guests staying for a longer period of time.
And also the 4 floors.
Oh yeah, I forgot. Yeah, we've also renovated at Trident Nariman Point 4 floors. These again have been very well received by guests. So guests are not only giving us very positive comments, but are also willing to pay a premium for the renovated rooms on the 4 floors, and we'll be undertaking that again going into the future.
Great. So coming to FY25, would maybe new more renovations, properties which are under renovation? Are there any large properties like Oberoi or Trident in Mumbai which would be back on stream in FY25, apart from Greenfield, which you already highlighted, the 2 hotels?
So we will continue to do. We have For example, at Vanya Vilas, we will add some additional tents. So there's work happening in a number of locations, and we will continue to ensure that the hotel product is hopefully best in class.
Great, sir. Just one last question on my side, which is, so in the beginning of the call, you highlighted something on the mixed use. Will it be in lines of the Oberoi Mumbai, where you have sort of some detail, or is it something entirely different?
No, it'll be entirely different. We don't have any mixed use today, by the definition that we give towards mixed use. So,
we've announced Hebel in the past.
yeah, we've talked about Hebel, and Hebel is in Bangalore. It's overlooking Hebel Lake. It's an 8-acre site. We can develop 1.2 million square feet, approximately, and we'll do, the idea or the thought process is to do commercial as well, a luxury hotel, and hopefully we'll progress that and be able to share further news on that development in due course.
Great, great. Congratulations once again, and all the best for future. Thanks a lot.
Thank you so much.
Thank you, Saurabh. We take the next question from Amit Agarwal. Amit, please go ahead. Amit, please unmute yourself and go ahead.
Can you hear me?
Yes, we can.
Hello, Amit. How are you?
Good, thank you. Sorry for joining the meeting late. Just wanted to know how confident of you are you about retaining Wildflower in Shimla? I just want your true opinion.
Amit, I would prefer not to answer that, but if you read our UFR or what we published and the note on Wildflower Hall, it'll give you all the facts that explain how confident we should be. If you haven't read that, I'd really suggest that you read that.
No, I've gone through that. I just wanted your opinion, how confident you are, like, how strong is our case? How strong is our case, if you can share that?
It's as strong as what is written in that document.
Okay. And because many new properties are coming up and we are just managing the properties. So can you give some, what is the managing revenue per quarter as a segment?
Yeah, Khalil, do you want to?
The total management fees in a year, I would say, is roughly around 60 to 65 crores as of today. But obviously, with new management contracts coming up in the years going forward, it will be higher.
And what is the gross margin in for this 65 crores?
Everything, it's all flow through to EBITDA, 100%.
100%. There's okay. And
we do spend, I mean, 100% in the sense that there's obviously management time, effort, and all that goes into it, and a fair bit of advertisement, etc. But yeah, but generally management fees are taken to flow through to EBITDA almost in entirety, and that's not only for us but for everyone.
And what and if we add one more hotel for managing services, so how much revenue that particular hotel will add?
Well, the number of hotels that we manage today are what they are. We have our own hotels, and the total number of hotels is about 30. So if you take that away, so on an average, somewhere it will be higher, somewhere it will be lower, but on an average, we would earn half the key per hotel. So, but that's a very average figure, Amit.
Yeah. Actually, may I just add, Amit? So, Amit, different hotels have different terms and conditions for managing hotels for an owner, and that information is proprietary to each of the hotel company. All I can say is that we, number one, run very good hotels, very profitable hotels, and at very competitive terms that we hope in future will be attractive to potential owners to partner with us for management. And these typically are, there's a percentage of GOP, a percentage of top line, etc. So that's how these management contracts are structured.
And my next question is regarding,
Amit,
yeah.
may I request you to join the queue again, because there are a lot of participants waiting.
Okay.
Thank you very much.
Thank you, Amit. Thanks a lot.
We take the next question from CA Vikash Vijayvargya. Vikash, please go ahead.
Hello.
Yes, Vikash.
Hello.
Yes, Vikash.
Yeah, one thing. Hi. Is it my side? Is it two questions? Is there? What is our sustainable EBITDA margin in next 2 to 3 years?
What does
Well,
I'm not sure what that means.
I think what you're asking is whether we will be able to sustain the margins that we have currently.
Yeah.
We're confident of sustaining those margins, yes.
Hello.
Yeah, because we're confident of sustaining those margins into the future.
Whatever in the current quarter is there.
I would say please look at the 9 months rather than the quarter, because it is a
understood.
business, and typically rates and occupancies are much stronger in Q3 and Q4.
Okay, understand. And regarding of these 3 Reliance co-managed properties, there one is a Mumbai, Gujarat, and another one is a UK. What is our current status is there, sir?
I really don't want to comment on it other than the press release that was issued by Reliance. So I'd just urge you to look at that. I'm sure you've already looked at it, and that's the position.
Okay, understood. Thank you on my side.
Thank you so much, Vikas. Thank you.
Thank you, Vikash. We take the next question from Bharat Sheth. Bharat, please go ahead.
Yeah, hi. Congratulations, Mr. Oberoi and Mr. Kondu.
Thank you.
We would like to, some of the greenfield that we have already announced, like in Andhra and as well as some of the. So, can you give some color when we are expected those to become operational and size of those hotels?
Yes. First of all, it's nice to have you online again, Bharat. I hope all is well.
Yeah, thanks.
The Tirupati Hotel will start with 125 keys. We've got a very large 20-acre site, and if demand is strong, which we expect it to be, we will then add additional rooms. And because the layout of the site, we will be able to add more rooms without causing any disturbance or disruption to guests who are staying in the hotel. Same position is at Vizag. In fact, the site at Vizag is larger. It's a beachfront site with beautiful ocean views, and that will also be 125 keys, expandable as well. Both hotels have large banqueting facilities to not only cater to buyouts or guests staying in the hotel, but also to other demand as well. Gandikota or the Indian Grand Canyon is a smaller hotel, although we have a large site, and that also we will be able to expand as the destination gains prominence.
Mr. Oberoi, is it possible to give some timeline when those will become?
Yeah, certainly. We'll absolutely open in under 4 years, all 3 hotels.
Less than 4 years.
Yeah, absolutely.
And is there any color you would like to give on this Morocco and Egypt property as their normalization is coming back, or how are we seeing?
I'll start with Egypt. Egypt typically, we have the Nile cruise, and we have a hotel in an area. It's called Shal Hashish. It's not far from Hurghada Airport. And these hotels and the cruise, typically let me start with the cruise. It does a well over $1,000 average room rate per cabin, and occupancies are into the 90%. But since the Gaza crisis, and it's largely dependent on the single largest destination from where our guests come is the US. And with the Israeli-Gaza crisis, demand has been severely impacted. I'm hoping there's talk of a ceasefire and possibly an extended ceasefire. I hope that happens. It's really tragic to see what's happening in Gaza, with so many civilians losing their lives, women and children. So I hope there will be a peace agreement. Hostages will be released, and we expect business to resume thereafter. Marrakesh has also been impacted by the crisis in the Middle East, and also Marrakesh was sadly impacted by an earthquake prior to that. So, again, I think once peace and stability returns, Marrakesh is such a incredible destination, very close to Europe, beautiful weather. So we hope that once stability returns, we'll see occupancies pick up. The hotel does a very, very good average room rate of over $800. But occupancy needs to pick up, and we hope that will happen.
And is it fair to understanding that Egypt is affected in Q4? Till Q3, Egypt was working normal?
No, it's Q3 was also impacted. I mean, the crisis in Gaza is now coming up on probably close to 3 months. I can't remember exactly, but it's probably around about 3 months. And there was talk even, actually, no, when the hostages were taken, I think the Israelis reacted quite quickly. So it's about 3 months, and absolutely was impacted in Q3. Large amount of cancellations.
Thank you very much, and all the best, Mr. Oberoi.
Thank you, sir. Thank you very much.
Thank you, Bharat bhai. Take the next question from Ashwini Damani. Ashwini, please go ahead.
Hello, sir. Congratulations for a very good set of numbers. So I just wanted to understand a few things. If we look at the average room rates, which is closer to 20,000, this translates to an approx US dollar rate of around 240. We were looking at some data sets from Hoteliviate, and in the past, this has peaked at around the same levels. Do you think that there will be enough and more pricing power, or I understand that these rates are similar to what these rates were in 2007, but do you think that there will be a breaking point beyond which you may not have a pricing power? So
Ashwini, I think it's a great question. I mean, I really thank you for asking this question, because my personal view and my perception is that India, and I'm not only talking about our hotels, we have, as a country, very good hotels, whether it's Oberoi, Leela, or Taj, and others. High quality hotels, good service, but we're relative to what a quality of hotel like this would cost elsewhere, we are extremely underpriced. And it's not, I mean, I would say there's no reason why our hotels, even in city locations, our leisure hotels do rates of close to $1,000 a night. But I don't see any reason why our city hotels cannot come close to that over a period of time. I think with India moving in the direction it is, with disposable incomes going up sharply, with people looking for quality experiences, with people willing to pay a premium for quality, I see substantial upside in average room rates. And I will still maintain we are extremely underpriced right now. And there's no reason why that will not increase over time.
Thank you, sir, for that. So just a counter question to that. There were newspaper reports also, and as a traveler myself, I sometimes feel that the hotel rates in India restrict our traveling. Probably sometimes it's cheaper to travel to a southeastern country than travel within the country for the same experience. So if I could go to a Goa, it's costlier than going to say Thailand or something, or even a Vietnam. So, and hotel rates are playing a key role, airfares too. So how would you address that?
Yeah, I think, again, I think I covered that, Ashwini, but again, a really valid point that you raise. Oberoi leisure hotels, like I mentioned, have rates of close to $1,000 a night. Certainly in winter, and it's a little bit lower in the summer months. So they are comparable to other hotels around the world for that quality. So if you stay at, let's say, I'm just trying to pick a city. If you travel to Thailand and you stay at, one of the leading hotels in, for example, Phuket, or if you travel to the Maldives, they're frightfully expensive in the Maldives. But Phuket, you'll be paying for the top hotels. The Aman is a very nice hotel. In Phuket, it would have rates of well over $1,000. And there's no reason why our hotels are any less. In fact, I would like to think that, not specifically talking about Aman, but in general, Oberoi leisure hotels are certainly at par, if not better than any other hotels around the world of that caliber. But our leisure hotels are in that price range already, where we're not.
Prince, just hang on for a minute. I think so. There's some connectivity issue. Prince, just give me a minute. I'm speaking with the management. Hello?
Hello, Naveen. Hi, I don't know if you can hear me.
Hi, Vikram. Yes, we can hear you.
Sorry, Naveen, the line, I don't know what happened.
No worries.
But just to finish, I don't know if Ashwini is still online, but just to finish the question he had. Sorry about that, Ashwini. I don't know what happened.
Ashwini is there, yes.
But I think the real opportunity lies in our city hotels, where rates are very low. I think the upside in Oberoi leisure hotels is limited. It may increase, maybe not significantly, but the opportunity really lies in city location, where I believe. Can you hear me?
Yes, sir.
Oh, sorry.
I think I got your answer. Thank you,
Okay.
sir. Your answer gives us a lot of confidence. Thank you.
Thanks, Ashwini. Thank you so much.
Thank you, Ashwini. We take the next question from Rajiv Bharti. Rajiv, please unmute yourself and go ahead.
Yeah, good afternoon, sir.
Good afternoon, Rajiv.
With regard to slide 11, where you have given market-wise data in terms of RevPAR, and then if I corroborate this with, let's say, last year, same quarter data and compare it against, let's say, pre-COVID number. So your Bombay RevPAR is grown at close to 14% CAGR versus, let's say, pre-COVID. Versus, let's say, rest of the market, especially Delhi, is still at 10%, and there are markets like Cochin, Kolkata are 7% CAGR growth as compared to pre-COVID. So what would it take for, I mean, is it possible for everybody to catch up on Bombay in terms of, let's say, I mean, versus pre-COVID, we are 72% higher.
This is so again, it really, Rajiv, will go city by city. I can't give you an answer that says everybody's going to catch up, or it really varies from one, actually on the hotel itself. Actually, you talked about Cochin. Cochin is unfortunately one of our worst performing hotels, and the growth you see is on a low base. So really, I can't answer that question. If you know, is there a potential for Delhi to improve substantially? There is. Calcutta is a little bit more price sensitive. Bangalore, there's some headroom. So it really depends from location to location.
That helps. But my question was, for example, I mean, if you compare Q2 data, Delhi was, let's say, in terms of recovery versus pre-COVID, it was, let's say, the top performer in your portfolio at a 16% CAGR. And now it is Bombay, it is 14% CAGR. And you explained partly that, you know, you've opened some facilities in Bombay, and which helps. So will it take, you know, would you have to invest in other properties for this rates to catch up in other markets as well?
So our experience has been, you know, when we invest in a hotel, the improvement in performance is substantial. The Oberoi New Delhi is an example. The Oberoi Mumbai is an example. The renovated floors at Trident Nariman Point are an example. New restaurants in Bangalore. We renovated the F&B in Bangalore a few years ago. We saw a substantial improvement in those restaurants' performance. We're doing that in Bombay at Trident Nariman Point again later on in this financial year. So you know, we are absolutely committed to improving hotel performance, and if we believe that requires investment, absolutely we will make that investment. And we are extremely thorough in our analysis and the diligence that we do. We don't base it on. We all are passionate about what we do. We love what we do. It's our life, right? But at the same time, we don't mix passion with fundamentals and with analysis. So we need to ensure that we spend money wisely, and we get a return for the money that we're spending.
Sure. And so on slide 8, particularly the Indonesia part, you have seen substantial improvement in occupancy. Is there something to read there? Have you made some progress in?
I think we made some, I wouldn't say anything. We made some fundamental changes to how we were positioning those hotels, and we were much more vigorous in, monitoring, adjusting bar pricing, working with travel partners, because it's all leisure business. Working with travel partners, even basics like the contracts, ensuring that it's a win-win for the hotel and for our travel partners. So no real rocket science. What we do is quite simple, but we try and execute well. And as a result of that, we've seen that improvement.
No, my question was that asset.
And in Lombok, it's been. Sorry, please go ahead, Rajiv.
No, sorry, please, you please continue.
No, and I was going to say in Lombok, the improvement has been substantial.
So I was under the impression that those assets require some renovation, because of which the occupancy was low. And I mean, I was wondering whether we have made some progress on that front.
So the hotels do, or actually, so let me take Lombok. Lombok is, even though the hotel is not a new hotel, the product doesn't need anything major. The rooms are exceptional. The hotel is really first class, and it's maintained. If you go to the hotel, it looks brand new. We've maintained the hotel. So really nothing substantial needs to be done at the Oberoi Lombok. At the Oberoi Bali, there's an opportunity to really reposition that hotel to take it to a rate of, in keeping with other Oberoi leisure hotels. So, anywhere between $800 to $1,000. And that's where the opportunity lies. And if we want to capitalize on that, that will involve really upgrading the hotel product. We believe that's the right thing to do. We believe that the hotel could be a market leader. It's got an amazing location, very nice beach. It's a unique product, and it just needs a product upgrade in order to drive those kinds of average room rates with a strong occupancy. And our analysis has shown, we looked at, I think, probably the last 15 years of data for the comp set in which we currently operate. We also looked at the comp set where we want to operate, and clearly the numbers and the growth is coming in the comp set that we want to operate in, the premium segment. So that's where we believe the opportunity lies.
Great. Thanks a lot, sir. That's
my pleasure. Thank you, Rajiv.
Thank you, Rajiv. We take a question from Dhruv Agarwal. Dhruv, please go ahead. Dhruv, please unmute yourself and go ahead.
Yeah, can you hear me?
Yes, we can. Please go ahead.
Yeah,
Hello.
sir. Very good afternoon, sir.
Good afternoon.
Congratulations on the very good set of numbers, sir. So what are the expansion plans going forward, like in, say, 3 to 4 years? And along with that, what would be the capex that would be required for the said expansion, sir?
Dhruv, you really have to forgive me for this, because I'm not going to answer the question the way you want me to answer it. So please forgive me, but we are committed to growth. And as and when we have details to share with you on individual hotels, we will share that information with you. But other than that, I think the proof of the pudding is in the eating. So let us work hard towards growth. and let's continue to make those announcements as and when they happen. But please rest assured, we are absolutely committed and focused on driving growth, and we're financially in a very good position to do that.
Okay. Sir, as on date, what would be the bifurcation between number of rooms between business hotels and the leisure hotels? And going forward, what would be the ratio between these business hotels and leisure hotels would be?
Yeah,
I think these informations are already available in a number of our investors' presentations. If I can request you to just go through the presentation in detail, it has the data.
Okay, okay. And so the last one,
towards the last slides, you'll get a detail.
Okay, sure. And just last one question, sir. What kind of RevPAR growth or ARR growth we can expect going forward and the occupancy levels, sir?
I mean, I don't see any reason why demand will not continue to be strong. India is, in its golden years of growth, and we see that continuing, and therefore we see demand will reflect that for hotel accommodation. And Kallol also shared in his presentation, really growth is coming in the premium segment, which is where the segment where we play and we would like to continue to play.
Okay, sir, can you please quantify some percentage if you give some color on that going ahead, what would be the percentage growth in ARRs or occupancy levels?
Dhruv, I haven't prepared that number, and I don't want to just give you a number. All I can say is that it's going to be very strong, and I'm hesitant to give a number without doing proper analysis.
Okay, okay. Okay, sir. Thank you so much. All the best for the future, sir.
My
Thank
pleasure.
you, Dhruv.
Thank you so much.
Kallol, do we have time to take just one last question and a few on the Q&A board?
Maybe just one last question, Naveen.
Sure. We take the last question for the afternoon. Udit Sehgal. Udit, please go ahead.
Hello, can you hear me?
Yes, Udit, please go ahead.
Yeah, sir, I wanted to know a bit about the airline catering business. I mean, are we doing domestic and international, and what is the trajectory we see going forward on that?
So we're very positive about that business. Our focus has been and will continue to be on international, although we are doing some domestic as well. And we have a strong domestic airline partner that we work with, and we will continue to work with them and nurture that very important relationship we have, as we have with our international airlines as well. Kallol and I are both, and the gentleman who heads that business are very positive about the future of that business, and that's reflected in the numbers that Kallol has already shared with you.
Good.
Presentation.
So what is the scope of scaling that up? And I'm sure there could be operating leverage at play as well. I mean, we could expand the margin.
Yeah. Kallol can answer that question.
Yeah. So we are already we still have a lot of capacity to utilize because our kitchens have been built to be very modern and contemporary. We've just renovated our Bombay kitchen, so we have plenty of capacity. So therefore, and you know that there are several airlines even within India which are amongst the highest purchasers of aircraft in the next several years. So therefore, we don't see a dearth of capacity, and we have the capacity to fulfill that as well already.
Thank you so much, sir. And one last question, Mr. Oberoi. You had said in the starting, you see certain areas where we could further improve. If you could just share that with us.
I can't remember the exact context in which that I said that in. So if you can just remind me, then I can be more specific in my answer.
Somebody was congratulating you on the results, and you said, I think there's some areas we can still improve further.
that we can improve in every area. We cannot be complacent. I mean, we have to strive for perfection in everything that we do. And perfection is a moving target. So that's one. But I think maybe, and I'm not sure, you have to forgive me, I don't remember exactly the context in which I said this, but I think there is opportunity to look at any hotel, any area of our business that could be performing better, and really drive or create a plan that helps improve that performance. So that's one. The second one is that when, if we continue to upgrade our product or our hotels to really be at a premium level, that always yields results. And we've seen that on multiple occasions. So we will continue to do that as well.
Okay, sir. Thanks a lot.
Thank you, Udit.
Thank you so much. Naveen, thank you. Thanks so much. And
friends, we've run out of time completely. Kalal, can we take the questions on the Q&A board, or should I mail them to you?
Yeah, I think if you mail the questions to us, like in the past, we will be more than happy to address them. And of course, from time to time, we keep meeting investors through various channels. So we are happy to answer any questions going forward.
Since we've run out of time, I'd like to hand over the webinar to Vikram for any closing remarks.
No, Naveen, just other than thanking everybody for participating and thanking you, other than that, nothing. And I enjoyed speaking to all the participants and doing my best to answer the questions along with Kalol. And thank you for all your good wishes. We really appreciate that very much, and it gives us additional inspiration to continue to do the best we possibly can.
Thank you. Thank you.
Thank you very much, Vikram and Kalol, for taking the time out. And I look forward to hosting you again for the full year results now. Thank you. Bye-bye. And have a nice day.
Thank you. Thanks so much. Cheers. Bye-bye.
Bye-bye.
Bye. Bye.
You're getting serious investors.